Hey friends, welcome back. If you are new here, my name is Ronak. On this channel, we talk about book, recommendation, freelancing, and how to make money online. If you love any of this topic, then make sure you subscribe to this channel. Today's video is all about understanding money in the deeper level and key takeaways from the book Mint Your Money by Pranjal Kamra. He is author, YouTuber, investor, and Pranjal, if you are watching this video or any of from your team is watching this video, then I would love to do a podcast with you where we talk about all these terms in the detail. I hope we will make it someday. Talking about the book Mint Your Money by Pranjal, it's definitely a good guide for the newbie. I divided this video in total 5 parts: wealth creation, debt, insurance, taxation, and investment. Before going to any of this topic, let's first understand what is a saving and what is a net worth. So net worth is definitely its assets minus liabilities. We all know these kind of basics, but when it comes to understanding and when it comes to how to use those topics in your life, then there is a comes a point where you understand first your personal finance and budgeting, all those stuffs. So let's first understand what is a saving. So saving is nothing but your income, like whatever the salary, income, bonus, whatever you get minus your spending amount, or whatever you spend, which is your rent, your bill, your phone bills, whatever you spend that amount. So saving is equals to your income minus expenditure. So all this, whatever the remaining amount, is saving. So what I believe is saving is something you can definitely work on it to achieve personal finance or to achieve financial freedom or financial independence. You have to take care of 5 things majorly. First one is your saving, which is which is really important. Second one is your debt, which is we are going to talk about. Third one is taxation, investment. Last one is insurance. If you can control these 5 aspects of your life, then you can get financial freedom in early days. Let's talk about the first part of this video, which is wealth creation, or first part of this book, which is wealth creation, which is one of my favorite topic because I believe in the wealth creation, and rather I will be wealthy than being famous. So it's quote from the novel Ravikant. So it's better to be wealthy than famous, and I I absolutely agree on this. So the first steps toward the wealth creation is again the saving. If you don't have saving, then you cannot start with the wealth creation. So it's really important to understand the definition of saving, which I already said. Saving is equals to your income minus expense. If you remove everything, then whatever the remaining is saving. And there are 2 ways to save, or there are 2 ways to increase your saving. First one is decrease your expense. Like if you can decrease your expense by cut down all the subscription, whatever you have, whatever the expectation, we are going to talk about the budgeting later. But if you can cut down the expenditure and increase the income, then obviously your savings will definitely increase. Saving is nothing but part of your monthly income which you choose not to spend. After saving, the next part comes the budgeting, which I believe really important. Either you can do the monthly budgeting, quarterly budgeting, or yearly budgeting, but I believe you should start with the monthly budgeting. It's really easy. I don't know in India why don't people consider budgeting is really important part of their life. You just have to spend 1 to 2 hours every month just to understand your budget, like how many income sources you have, how much you have spent on the different things. It's really easy to do budgeting. The formula I follow to do budgeting is simply take out the statement of your bank account from the last one month or 2 months and note down everything, like how much amount you spend on the fuel, how much amount you spend on the clothing, how much you spend on the food, whatever the amount is, and how much income you received. So ultimately whatever is remaining is your saving, and this is the first step to get in the path of the wealth creation or the financial freedom. Basic rule in budgeting that everyone in the world follows is nothing but the 50-30-20 rule, which says that 50% of your monthly income, it should be your need, like necessity, whatever you have. 30% should be what you want, or your all the wants, and 20% should definitely go into the saving. Well, it's not like you have to follow this rule. You can create your own rule also. Like for me, for my majority of the income, like 50 to 70% goes into investing, I mean saving, and ultimately goes into investing. 20% is all I spend on the what I want and what I need, and the 30% is goes into the the things I want to buy. Like definitely I want to buy a new camera, I want to go on the trip, so I save 30% for that amount. But the majority of my portion, like 60%, 20 60% goes into the saving and ultimately into the investment, because I know in future it's really, if I want to beat all of this inflation and I want to get really huge money, then I have to do this. Now let's talk about what are the ways you can definitely do great with budgeting. The first one you should do is start your budgeting as early as possible. I mean, you should do budgeting periodically to get better idea of your each and every month. Like if you do it for the 3 months, then you will get better at the 4th month. Second one, keep your budgeting as low as possible. The lower the budget, the lower your financial freedom in the future. Third thing is spend less than you earn. Your spending amount should be less than your earning amount. Fourth, track your actual cash flow, like how much amount of your cash need each and every month. Try to calculate that cash flow. Let's talk about the second and the most important topic from this book, which is debt. So debt is nothing but the all types of you loan take from borrow, or you borrow money from your friends, or you take loan from the bank, or you take loan from any corporate company or any other thing. But there are few times you definitely need a debt. So there are, I'm going to classify this into good loan and the bad loan. So what are the good loan and what are the bad loans? So good loan is nothing but your education loan, which is definitely a good loan, your home loan, which is definitely a good loan, but there are few conditions that you should definitely follow. On the home loan, you have to pay the taxes. If you can pay a front amount really big, then it's definitely a good loan. But if you cannot pay a front amount and if interest rate is very high, then I don't think this is going to be a good loan for you. Education loan, it comes under the good loan. Second part is bad loan. So what is a bad loan? Your car loan, your credit card loan, all of these kind of loans where you have to spend money to get something experience or to get experience, that's all type of bad loan. So make sure that is it really necessary for you to take the loan, is it really important to take the loan, or you can skip that step, so just to be at a better position financially in your life. Now the next and the most important question comes that, okay, even if I want to take the loan, even if I want to borrow the money, then how much money I should borrow, right? Everyone have this question. So what is this is the same question like asking yourself like how much you can eat. The answer is same for both this question. It depends. It should be definitely less than your earning income. Like consider the scenario that if you are earning 10 lakh rupees per annum, so you should definitely borrow the amount between 6 lakhs to 8 lakh in a span of a year, so you can pay that amount by the end of this year. But if you can take the loan of 20 lakh, 25 lakh, 30 lakh, then you have to spend 2 to 3 years to pay that. Plus you have to consider the inflation rate, which is going to, I mean, if you take the loan 25 years today and if you are going to pay for the next 10 years, so obviously that 25 lakh is not going to be same 25 lakh, it can be 30 lakh or 32 lakh, 35 lakh. So you have to consider inflation rate and every possible aspect of life when it comes to borrowing the money. So always try to borrow less amount than your earning amount. So when it comes to personal loan, there is a system called EMI system, which I believe really good system. If you have no EMI, no cost EMI, then you should definitely go for it. But remember, if your salary is monthly 20 to 30,000 rupees and if your EMI start 50,000 rupees, then again it is a big trap. You should try to get EMI only at the 10% of your total monthly income. Like if my income is 1 lakh per month, then you should consider taking EMI 10,000 rupees to 15,000 rupees per month. So that's all about the debt. Let's talk about the third and my most favorite topic, that is investment, because without investment you cannot get ahead in the life, you cannot level up. So the first question that author asks, do you really need investment? The obvious answer is yes. Without investment you cannot get financial freedom, you cannot beat inflation, you cannot, like your 10 lakh rupees is not going to be 10 lakh rupees after 5 to 10 years. So you have to beat inflation. It's really important to start investing. It's, you know, the reason I can say investing is my favorite topic, because I know I realized this so early. So I started my investing at the age of 20. Now I am 23 years old, but the investment amount and the returns are really great. What I suggest is, if you cannot increase your income, like you cannot work on the side hustle project, you cannot create multiple business, but you can always own the equity, you can always own the mutual funds, you can always go for the business opportunity or the index fund. To understand all these topics, you have to first understand what is a true assets. True assets is nothing but where you will get returns even if you are not doing anything. Like, first one is real estate. Real estate is not possible for our age, because we are into the age 18 to 25, and real estate is not our cup of tea. Second one is gold. Well, gold is also, it's not possible we can buy 1 kg or 2 kg, but always we can buy over the quarterly. We can start buying 1 gram to 10 gram, which I believe. Second one is mutual funds. You can definitely start the SIP. Fourth one is bonds. Then there is called a share market. So all of these are assets, and the more you invest in assets, or the more you create assets, the more your income will increase, and the more you decrease your expense, the more your savings will increase. When I talk about the investment, the most important question comes that what you are going to do for your retirement, which even I made a lot, even I talk about this a lot of time. You should start thinking about retirement as early as possible. You should plan your retirement as early as possible. So what are the different ways to plan your retirement? Even if you are 20 years old, 25, 23, whatever the age is, you should start planning your retirement. So there are three kinds of, you know, is investment when it comes to retirement. Obviously mutual fund is there, but there are long-term plan like the PPF, there is a pension scheme, and all of this you can learn on the internet. I'm not going to talk about. The solo reason I'm saying you should start early, it's all because of the compounding effect. When it comes to investing, the first topic you can remember is nothing but the mutual funds. Mutual fund is nothing but investing into share market, but with the lesser risk. I'm not going to go deep dive into the mutual funds because there will be a specific video on that topic, but I can give you a few talks. Always go for the direct plan. Like, there are two plans, regular plan and the direct plan. Always go for the direct plan if you want a great returns. Second thing you should check always is expense ratio. What is the expense ratio of that specific mutual funds? Third one is AMC value. How much amount of AMC that values, I mean how much amount of rupees the value in AMC have. Fourth one you should check is what is the exit load of that mutual fund. If you don't have time to invest into share market, if you don't have time to learn share market, then choose the mutual funds, which is definitely a great option. The next part in this book is all about the understanding taxation. What are the taxation, how you should pay the tax, what are the different ways to reduce your taxes which is legally possible, how you can get the ATC, all of those two stuff. But if you're not interested, you can directly go for the CA or go for any chartered accountant. They will help you with all of those things. But I believe you should understand the basics of taxation. What is your slab like, how you can reduce it, what are the mutual funds that will give you benefit, is it how you can invest into the share market so you will get the tax benefit. So all of those things are really important. I'm going to just tell you the 4 words when it comes to taxation, which is save money, not tax. The last part of this book is talk about the insurance. Why insurance is necessary, what are the insurance plans, is it insurance necessary? First you should understand what is the insurance. Insurance is nothing but this agreement between two entities where one entity agrees to pay to the second entity whenever he or she is in problem or whatever the accidental death or whatever that happens. So it's nothing but the basic of insurance. So you should consider buying an insurance in your early stage, so you will get that benefit. So there are 3 insurance, like first one is life insurance, health insurance and general insurance, but I will majorly focus on the life insurance and the health insurance, which is definitely really important. Life insurance is nothing but even if something happens to you, then your family should be secure, your family should get a good amount. So you should think about the life insurance, and in the life insurance always go for the term insurance, because that's what you will get. In the less amount you will get higher amount even if you lose that money. Second one, it comes to the health insurance. Health insurance, what I believe is you should manage between the 5 to 10 lakhs for your family and for your personal care. Most of the companies provide health insurance, so you don't have to much worry about it. But think about your family, think about your future family, and start working on this health insurance. Third one is general insurance, which is basically your laptop insurance, car insurance, all of those tips. That's all the key takeaways from the book Mint Your Money. I hope you have liked this video. If you have liked this video, then make sure you like this and comment, subscribe to this channel, what you liked about this book. Also I have made video on the first book by the author. You can check on the I button, which is talk about the share market and everything. If you want a lot of insights from this book, then you can definitely join my newsletter, where I'm going to share a lot of details about this book, also different books which I don't usually share on the YouTube. So make sure you join the newsletter. Talking about the conclusion of this book is what I believe is there are two books in the India right now. The first one is Let's Talk Money by Monica Hallan, and second one this book, which is definitely a good guide for the newbie. Like if you are like clueless about whatever the happening in the insurance, taxation, or what is a personal finance, then you should definitely pick up this book, because this will give you the overall idea about all the aspects of your life that is related to money, that is really related to your financial freedom. But what I believe also is, if you have little bit idea about all those things, like you already at 23-25 years old, and you all know that what is a mutual funds, what is a share market, how all of those things work, then there is nothing new in this book. Then you can skip this book for sure. But if you any of this, like if you have not idea about the taxation, if you have not idea about the insurance, then you can definitely go for that particular section and read that portion. That's all about this book. Like this is definitely a good guide for the newbie or the beginner, but not great who have little bit also experience or who have read a lot of books on the finance industry. So it's definitely good guide for the beginner. So that's all for today's video. I hope you have liked it. I already made a video on Let's Talk Money by Monica Hallan. You can check this here. I also shared the best financial books that you should read. You can check this video here. And that's all for the today's video. I will see you in the next one. Bye bye, tata, take care.